The following is a public access production. It is not produced, sponsored, or endorsed by this station, the local government, or the cable providers. The program producer is solely responsible for the content of this program.
Hello, welcome to John McHugh Real Estate. Thank you for joining us. Glad to have you back here. What we're going to talk about today is mortgages and the real estate market, how everything's been going and where we see them going from here. I want to begin by talking about an article that I wrote for the Natick local town pages, and I had it written so that it was published in February of this year. And I began it with 2023 in review. Where are we headed? Increasing interest rates throughout the year were a challenge for home buyers, especially first-time buyers, and impacted potential sellers as well. The market has been in a catch-22 situation in that many people wanting to purchase a new home were put off by higher interest rates than we've seen in many years. Many buyers decided to wait due to that and the historical lack of inventory. Home sellers locked into affordable low-rate mortgages were an equal part of the issue. Sellers decided to remain in their current homes with the low mortgage rates that they had been paying prior to the increases instead of selling and taking a mortgage at a higher interest rate to buy a new home. While homes were still being bought and sold, 2023 saw a stall in the market on both sides, leading to an all-time high pent-up of buyer demand. We're halfway through this right here, and I want to let you know that we're going to have mortgage expert Sangeeta Kalidas join us today. Welcome, Sangeeta.
Thank you, John. Great to be here.
Thanks for coming by. What do you think of what I had to say so far about that?
Yeah, you are absolutely hitting it right on the head in terms of there certainly are a large contingency of buyers out there who can't find any inventory because of that very reason you spoke about. Those who own homes and need to downsize, or empty nesters feel like they have nowhere to go because if they were to downsize into a property, they're still going to be paying such high rates, and it doesn't help them out financially. So we certainly are seeing a lot of that happening, hence the low inventory numbers that we see, and lots of first-time home buyers and new homes, new family units being created with all of our millennials that are out in the market ready to purchase homes, creating new households. So we certainly are seeing that that seller's market in the sense that there are not enough properties available for new first-time home buyers.
And that's exactly where I saw us before. And that's a great roundup of trying to sum up 2023 and keep that together. Now I'll continue, and I'd like to get your thoughts on the rest of it. And it was nice that you helped me make sure that all the quotes that I did on interest rates and mortgages were good with this article, so I appreciate that.
Sure.
So with interest rates seemingly at the core of the stalled market, it seems that continued reduction toward more affordable mortgages would be the solution for both buyers and sellers. For the best possible outcome in 2024, we need to see a considerable increase in houses for sale. When more homes come on the market, there will be a gradual leveling off of all-time high prices, continuing to move in the same direction as overall inflation, yet becoming more affordably within reach. Also necessary would be interest rates returning to a closer to normal 4 to 5%. It's been greatly variable, and Sangeeta will talk on that. The demand for houses exceeds supply, and this will probably not change until the mortgage rates go down. Lower rates will bring more sellers and buyers into the market. As we head into 2024, the National Association of Realtors has projected a 30-year mortgage rate to be between 6 and 7%, and that's by the end of 2024, according to that organization. The movement of interest rates is heavily influenced by the rate of inflation, and this was a key point I wanted to drive. If inflation rises, mortgage rates may not fall as quickly. If inflation is stabilized toward reducing, interest rates may fall sooner than expected. Home buyers and sellers should keep a close eye on actions taken by the Federal Reserve, and that's another thing Sangeeta is going to touch on, and its ongoing regulation of financial markets. Sellers have a place to go or who will pay cash for their new residence should take advantage of the lack of supply and abundance of buyers. Home buyers who see something they truly love may consider financing at the best rate available today with an eye for refinancing in the future when the opportunity arises. While keeping a close eye on the listings and the real estate agent suggestions that are provided to you, buyers can continue to put money aside on their down payment, polish their credit history, and obtain the important pre-approval, which is necessary for submitting any offer. Sellers should also be ready to put their best foot forward in the presentation of their home. Get little repairs done, clean out, organize, and consolidate. Work with a real estate agent and make sure that you're getting all the information that you need so that when you do act, you're ready to go. As you see, it's not just all about the mortgage rates, is it, Sangeeta? It's about
a lot more, exactly. Yeah. So as much as we like to see rates really low, the Fed, who dictates what the Fed funds rate is keeping rates in a holding pattern right now purely because the economy is still pretty robust. Unemployment is at a pretty all-time low for the most part. And they want to make sure that our economy is not going to go into this inflationary environment that we've seen over the last few years where prices are across the board are exceeding and prices are not affordable for anyone to purchase just basic goods. So the Feds, that's their job, is to make sure they're keeping prices in check and affordable for most people. However, there's been a lot of commentary about how the Fed is being very aggressive over the last couple of years when they've raised rates so many times last year. So it's definitely been affecting some of the economy, which is kind of where they've been wanting to go, but it's hurting some buyers definitely more than, say, somebody who's not in the market to buy a home.
It's not the easiest conversation to have. This was a difficult article to write because we're trying to pinpoint why the market is what it is and why things are happening. And interest rates are on the cover of every trade publication and everywhere. But I want to make sure that we bring a well-rounded approach with the help of Sangeeta so that we know it's not all about the mortgage rates. So you have them there, and we had the variables. Give me an example of how first-time home buyers are responding to this. What are they doing in your experience right now since the rates are, they were up, they've come down a bit. What do you see?
Sure. I always tell first-time home buyers we have a saying in the mortgage industry where you marry the house and you date the rate. So ideally, find the house that you love, use it as your starter home, and you can always refinance your mortgage. But the house is where you're going to appreciate and grow equity instead of renting endlessly and not seeing any return on your property and your appreciation. The Case Shiller Index just came out yesterday and has already quoted that rates are up 5%, a little bit over 5% since last year this time in our area. So we've already seen appreciation, even though rates have gone up. You're still getting appreciation on your home. So ideally, yes, it may be a pinch. You may cut out some other discretionary income that you have to buy your home. And so many buyers can purchase with 3.5% to 5% down. So that's also an option. There's many, many loan programs out there that allows first-time home buyers to affordably buy a home.
What's the average? Because I'm so glad to have you here because not only were people glad to hear what you had to say, but in combination with my expertise in the real estate market on the homes end of things, your financial input is great. And to be able to explain a well-rounded package of information to everyone. So when I get to a point and I'm talking to my clients about what they might think about putting down for a house or what they might expect for a normal rate, there's always a point where I want to bring in an expert. And it's someone who they can sit down with that does this all day long. And that's you. So that can be really helpful. Like when I say, you want to work with a real estate agent, you want to work with a good mortgage agent, mortgage broker as well. When we come down to that and we're saying 3.5% to 5% down, it's going to vary on the programs. I'd like to hear about the programs.
Sure.
But what do you see on average? When I'm writing an offer, I say it's a minimum of 5%. If you want to look a little bit more serious in the competition, you could put down 10. You could put down more than that.
Yeah.
It's all going to the same place.
Yeah.
So that's where I leave it.
Often agents think the less money someone puts down, the less qualified they are, and that's not necessarily always true. So I try to let agents know, listing agents know, that putting 5% down is not the end of the world. It's purely because it's a first-time home buyer who may only want to be in the home for 3 to 5 years, so they don't want to put all their equity into a home to purchase the home, but keep some cash for maybe their next home or some other projects around that they want to renovate. So don't always think that somebody putting 5 or 10% down on their first-time home or any home is a negative thing. That's just advice that we share once we talk to a buyer on what their goals are. Do they want to renovate something? Do they want to buy furniture because they don't have furniture? So I give a global review of a first-time home buyer's profile to see what works best for them. I don't encourage everybody to put every last dime down to make their down payment, so it's not a negative thing to put 5 or 10% down. And the fact that a lot of loans allow that just lets you know that appreciation does happen, and paying mortgage insurance is not the end of the world.
Sure.
Because
I think in the past, a lot of people have thought, I want to put down as much as I can to avoid PMI, and that's not usually the case. And I'm glad to see that you think about the other concerns. What else are you going to do? You don't want to get in with all in and then more than you can afford, especially if there's going to be some small repairs or things you're going to want to do to further take care of and increase the value in the home. You made a great point when you're saying you're going to consider all of that. So 3.5, depending upon where you're going, 5%, not a bad thing. No. What's the average that you're seeing with first timers?
Anywhere from 5 to 15%.
Okay.
Sometimes a lot of buyers will get gifts or from family members who help out, and that always takes them to 20%. Again, every single buyer is so different, and looking at their complete picture allows me to provide the right option for each buyer.
Got it. Now you can jump right into where we are today with the rates. We like to hear it.
So the market has not enjoyed the news about the Fed not lowering rates as fast as they anticipated in the first quarter. So the market has priced that in, and rates have ticked up a tiny bit over the last couple of weeks, but I feel like that will simmer down a little bit, and we'll start seeing some price or some rate relief in the next quarter. And that's purely the Fed watching and seeing what's going on in the economy. Like I mentioned previously, unemployment is still fairly low. Inflation, so a big number coming up tomorrow.
And that's the one that I was really trying to go out of my comfort zone in to try and explain why the interest rate might go up, why it might go down, why we may anticipate that it would go up or go down. And the inflation is something that I learned a lot of, and it makes a huge part of the process.
So right now, the Fed's goal is to get inflation at exactly 2%. It's a very aggressive goal. We're in the big number, the big inflation number that the Fed enjoys or relies on is the PCE, which is that's the producer consumption expenditure.
So that's the perfect balance that they're looking for?
Exactly. And so we're expected to see that number tomorrow. It gets released for the last month. And if that number is in the low 2s or even closer to 2, that'll be a good number, and the Fed will feel a little bit more comfortable about reducing rates further in, say, the next quarter.
Where do you think it's going to wind up?
I think we should see rates in the mid-6s on a conventional loan by June, July. Again, I don't have a crystal ball, but that's my prediction based on all the information.
And I'm not holding you to anything. I make my predictions too. Like I wrote this article in December to be published in February. That's how it works. And so I was trying to give a roundup of 2023 and then my predictions of what was going to happen in 2024. And of course, sometimes, we're up and down.
Yeah.
And that's why I wanted to make sure it was at the time that this was written or what have you. It's interesting that you get to that point where we're trying to figure out where the interest rates are going to be. And this is something that I ran into the other day. I wrote an offer for a client, and it's a cash offer, so we have no mortgage contingency on it. And The offer was expected. We get to the inspection, and that's moving forward. And then, this has happened to me before, we get a call. Well, it's not contingent on the offer is not contingent on the mortgage contingency, but we are going to take a mortgage. Still a cash offer, but we're going to take a mortgage because we were offered a very good rate. And this happened to me, and the rate seemed lower than I heard. I don't know what the gentleman is getting, but I didn't really have a retort because I was surprised to hear that the rate he was being offered was out there and available. So are there some lower rates for people that are maybe substantially qualified?
So there's options to buy down rates. So that's called buying points. So a lot of clients who think they don't want to refinance at some point will just buy down and say, hey, I want to lock it for 30 years and buy down the rate. So that's always an option.
Can you explain how that works a little bit, please?
So buying a point is considered 1 percentage point of your loan amount. So if your loan amount's $100,000, you're buying 1 point, you're paying $1,000 to lower the rate by whatever percentage it costs to lower the rate. So it's becoming more common as rates are on the little higher end right now. So it's not the end of the world to do that. And sometimes if you are going in that direction, it just helps you with keeping a lower monthly payment on your mortgage. It's very common right now. I'm doing that probably for half the loans that I write right now.
Really?
Yes.
Interesting.
It also helps somebody who's on the edge of their debt to income ratio qualification to come within a guideline to lower their rate a little bit. So they'll buy the rate to qualify. So that's also an option.
I think people would be really interested to hear how that goes. Not everyone needs to know everything that you have to offer, but that's really interesting, and it's not something that I've worked with a lot. So you're seeing that a lot now. And what else?
Other things that we can do, again, if you're putting a little bit more down payment, that's another lever. So we have a few different levers that we use to make a client comfortable with their monthly payment, to consider their monthly mortgage and principal and interest payment for the mortgage, homeowners insurance, and property taxes. All of that gets included in what a housing expense is every month. And it's sometimes a little bit higher than paying rent, but at the same time, the equity that gets built with buying a home outweighs the cost of the lower rent that people pay.
Excellent. We started with a roundup of 2023 and how that went, and we've gone right into where we see the mortgage rates today, where they might be in the future. And I think it's great that things seem like they're continuing to move forward.
Yes.
Rates have been lowering. We're seeing some more properties come on the market now that we're beginning the spring market. It is February for realtors. That's when we say it's spring market time, right? And move on from there. I've already put a couple of properties on the market and got offers right away. We had been seeing almost nothing for sale. So we would see a property come on that was well priced and well exposed, and we would see 3 or 4 offers, and we would see them well overpriced in the closing numbers. And hopefully that's going to continue. If a lot of people list their homes, prices will probably become a little bit more reasonable and more reachable. And so far, so good for a strong start to 2024 with the properties being a little bit more available, a little bit more within reach, and then the financing also being within reach for more buyers.
I feel like a lot of buyers should start talking to a lender maybe 6 months before they're actually thinking of buying, just to get ahead of the curve in terms of how much they can afford, knowing what number that they are comfortable with, what payment they're comfortable with. It just takes away some of the stress from having to rush and get all that stuff done when they're actually ready to make an offer on a property. And like that you prefer to know what price point you're looking for homes for a client. So that gets all taken out of the way if a client starts budgeting towards knowing what their plan is for purchasing a home. That always helps out. Or if there's something on their credit report that needs to be fixed, it gives them time to do that. So those are all great.
You've been through every scenario, and I find it so impressive. And I'm sure that the viewers at home have a lot of questions, because I know every time she says something, I have another question. I find it fascinating. We had a great real estate roundup. We had the mortgage roundup. Before I mention the open house that we did together, I want to bring up your special offer for clients where they're able to qualify to be as close as possible to a cash buyer, even though they had the mortgage contingency. If you want to.
Yes, absolutely. So we can certainly provide a pre-approval that's been fully underwritten by an underwriter. So there's no guesswork on whether someone's going to obtain their mortgage or not. And all that's needed then is for them to find a home. So we have a certain amount that we qualify a buyer for, and it's fully underwritten, a full approval. So typically the mortgage commitment's been issued. And that allows a buyer to confidently go out and say, hey, I don't need to have a contingency on my offer, and it's like purchasing a home with cash.
And do they have to, that sounds great, and you're well versed in it. On that offer, do you omit the mortgage contingency? Do you mention anything about it?
You can certainly comfortably leave out the mortgage contingency when you're making the offer, to let somebody know that a client's already been fully approved on a mortgage.
So it's basically same as
Cash out.
cash.
Absolutely.
That's great. I'm glad that we were
Yes.
able to go through that. So I had the pleasure of hosting an open house at a high-end home with Sangeeta a couple of weeks ago, and it was great. She had all of her mortgage information set up there with her offerings and rates and her business card, and I have my brochures there, and it's always interesting to see who takes what, isn't it? You never know, because yours has pictures of the house, mine does too, and I think maybe your picture on the front of yours pushed yours over the top. People took a little more of yours. But how did you like hosting the open house? Did you enjoy being there with me?
Oh, absolutely. I think it's great to be out there face-to-face with clients. So many clients nowadays are so busy with their day-to-day activities at work that they want to just have a conversation over the phone or via text or via email. So I really enjoy the personal connection with clients face-to-face that allows me to get to know them a little bit more. They get to see who they're working with.
And we had some agents too.
Yeah.
So that was great. Sometimes you never know who's going to, come to an open house. So you got to meet a couple of agents. You met Chip.
Yep.
And we were there together. It was nice for me, in case anyone came to me with specific questions about what might be available for, the $2 million range in terms of mortgages. And I work in all price ranges, and I always have. To have you there was great. And so we had a lot of people come through that house.
Yes.
We really did. And you got to be there and meet them and chat with them. And what else did you feel about doing the open house? Is it something you would do again?
Oh, absolutely.
Yeah.
I love going to open houses. I like seeing homes. I have an interest in real estate as well, and so it's great to see what you're selling and what people are buying sometimes.
So I'll give you some insight on what I was thinking. Sometimes when we put a new listing on the market, we'll get a call. Oh, could we preview this house? Can we show it to you? Can you show it to us X day or whatever? And sometimes you put it on the market and it can be shown right away. Sometimes you put it on the market and the seller wants it to be shown starting at a specific point. And in this case, it would be starting at the weekend open houses. And that's what we did here. And I did have an agent who was at the open house give me a call saying, could I come by early and preview that? So I asked the seller, and they said, we're still getting everything ready. We still need to do the finishing touches so that the house looks good. So they said if everyone could wait to the open house, that would be ideal. And I thought it was great. I chatted with him about the property, but then he came to the open house. And this is another reason, other than being interested in it yourself or having a specific client that's interested in it. 3 days later, I saw that he put a house on the market in Natick for almost the same price. Very similar size, similar number of bathrooms and acreage, and definitely in the same price point. But I'm quite sure that that was a comparative viewing to see, let's see what they're offering for this $2 million range and how it might compare to what I'm putting on here. So that was neat. And I was glad that you got to meet some people that weren't specifically with Coldwell Banker, but with others.
Yes,
yeah,
absolutely.
It was good.
Enjoy meeting agents and learning about what their business is all about, and it's something I definitely enjoy doing.
And you're located in the Wellesley office, but you do work all over, wherever people are looking to buy or what have you.
Absolutely. I have worked in Boston and Cambridge for many years, and also now live in the Metro West. And so just
Wellesley, right?
Yeah, so naturally just think that this is where my clients are, and meet so many people in my day-to-day, in my kids' school, and just being around in the community.
You never know do you?
Nope.
And that's such a great point. She's very interesting to talk to. I pick up a lot. I have had the pharmacist where I pick up my prescriptions. I've sold the pharmacist a house. I've worked with people that I met at the gym and people that you just became friends with. You never know. You work very hard at it because I'm in the office regularly. You know, things have changed a lot where we work, especially since COVID and people working remotely, but you're in the office every day. I see you there, and it's nice to know whether you have a meeting or I have an appointment, there will be an opportunity to pop in and run anything by you. And I think that's a mark of a true professional, someone who is in there and dedicated to do it. Do you love working in the office? Do you work remotely at home?
I do. I like interacting and I like learning about what's going on, and I have little conversations with everybody that comes in, and it's just nice to stay connected to the community and know what's going on. I feel if you're working from home constantly, I mean, there's advantages for doing that, but being out and about where everybody is, we're a sales-oriented business, and
FaceTime. They always say FaceTime. You want to make sure that you're there and everyone is aware that you're available. And you speak at the Coldwell Banker meetings.
Yes, I do.
For the offices, so you'll come in and give a weekly update on where the market is, where we see it going, and it's got to be a part-time job for you, because I know it has been for me, with the headlines different in every trade publication as to where we are, where we're going. It can literally be one day it appears like it's time, honey, we should buy now, there's the rate, and then the next day there's a different story. How do you deal with that fluctuation, especially when agents ask you?
Well, I love knowing what's going on. It makes me a professional and knowledgeable in what I do. So like every morning I read a few different newspapers, and I also keep in touch, or not keep in touch, but read different perspectives of economists of what's going on in the market. So it keeps me informed. It helps me keep my clients informed of what's going on. And yes, rates change daily, sometimes multiple times a day. And if I have somebody that's sitting on the line, on the fence about locking in a rate, I'll say, hey, today's the day we need to do this. Otherwise, you're going to miss out on a rate that's awesome.
So you're all on top of it, and I do the same thing. I'm watching out for what each buyer that I'm working with is looking for, and I usually make it clear in the beginning. I'll say, we should see the house as soon as we possibly can. When should we see it? As soon as you can. And sometimes they'll say, well, we're holding offers until Monday. If they start showing the house on Friday, offers will be reviewed on Monday, and the people will say, oh no, John, we have until Monday. I'm like, you need to write your offer right away. Right. You have an opportunity right now, and you never know what might happen between now and Monday. And it seems like if you're looking at the rates multiple times a day, you've got to be checking in with people, letting them know when to pull the plug.
Definitely, because the worst thing you can do for a client is telling them to wait on a rate, and a great rate just passes by, and it's not going to happen again. So I take that very personally when I'm servicing a client, to make sure I'm offering the best that I can.
Is it a big deal for them to decide whether they're going to lock in or whether they're not?
It is. I share all the information I have, and ultimately a client makes the decision, but I definitely give them information to help them make that decision.
It's the same for me. They're going to pull the plug on the house, and I always tell the seller, only one person is going to buy the house. And it's difficult when the buyers are thinking, should this be the one? Is this the one we're going to go with? And it's the same with your rates, right?
It's a big decision. Buying a home is probably the most expensive asset that they're going to buy.
And therefore, you're one of the most important people that anyone would ever work with. And I want to thank you, Sangeeta Kalidas, for returning to the show.
Thanks,
giving us
John.
all your information, and I hope you will come back again.
Absolutely.
You have all of it on top of the mind, and I appreciate it. And I want to thank you for joining us again for John McHugh Real Estate. We'll look forward to seeing you throughout the rest of 2024. Take care.